Hey guys, what's up? This is Andrew for TRENDLINES.com. So I'm here to make a very quick update, guys, because I need to go to a football match to see Panama playing in 10 minutes. But today was a very important day on Amc Gme, so I want to go with you through the price action to see what can happen next. Let's get into it. Alright, so we're gonna start on AMC, guys. I did a video yesterday to remind you the big picture, so I'm here just gonna, for those who haven't watched yesterday's video, just go watch it. I'm explaining what I think is happening, which is a massive move up to the 135 area. Of course, there is no guarantee about that, and we are here to monitor if everything is happening like we think it should happen. So the first thing we can check is, so I was expecting yesterday to have a small correction, a small consolidation below the 32-33 area where we got rejected on Tuesday. Yes, exactly, so yesterday. And I was expecting, I said that I think this would last between 2 days and 7 days, all right? And in terms of level, we have the first wave that already happened, which is going from 13 to 33, guys. So we can, to predict where the second wave could bottom if we are developing in 5 waves up, we can use Fib ratios, 38.2% and 61.8% to know where the second wave pullback might be going to. And I told you that yesterday that the 38.2%, which is around 26, is the most likely level to be hit. It got hit today and it was more than hit. So let's quickly have a look what happened around this 26 level. It got tested once. It was tested basically 5 times and then it broke. You can see clearly it broke with an increase in volume here, guys. So this confirms that this level was important. There was a lot of buyers here. I was personally a buyer here. I got some shares and I'm happy to get it. I will buy more on the downside because, like I said, the 38.2% is the most likely ratio to be hit in the second wave pullback. But we could also go to the 61.8, which is around 21. And whenever you have those Fib ratios that give you only areas, guys, then you only use trend lines to know where are the real support. 26 was a support. I just showed this to you guys. We had an increase in volume when we broke out below that. Does it mean that tomorrow we can't go above that level? Of course not. In those very high volatility periods, we always have a little bit of excess above resistances and below supports. So it's totally fine for me, even if, as you can see, the aftermarket is right now at only 25. It's totally fine for me. I think that pretty much anything can happen. We can go higher tomorrow, lower. Bulls are still in control, all right? Bulls are in control as long as we stay above 21. If we go below 21, guys, it's not looking good. I hope it won't happen. It might happen. I don't know. I'm just telling you that the usual development in 5 waves that could go to 130, which is my target adjusted using Fib projections, usually happens with the second wave pullback. That happens with low volume, and that goes to these ratios. So for now, we have only hit the first ratio, and look at the volume, guys, compared to the day before. This is Wednesday volume, only 95 million shares traded compared to Tuesday volume where we had 212 and Monday volume where we had 226 million shares. Once again, those volumes compared to what we can do on AMC, guys, look at those small bars. All right, they're big, I know, but they're small compared to what happened in Jan and in May. Especially in May. This is May 21. So basically when we went to 70. So what I mean is that for now we're looking all good. Even if this pullback we had today was, let's be honest, a little bit stronger than it should. It's better to move down with a smaller move than we move up, so that bulls keep control. Here, bulls lost a little bit control on the short term. Let's say what the truth, which is what is happening right now. Bulls lost a little bit of control, but on the medium term, they are still in control as long as we stay above 21. Once again, I don't think we're gonna break out above 32 right now, 32, 33. All right, this 200-day moving average. So let's call it 33. I think it would take a few more days. I'm still very bullish, and as long as we are below this 33 level, I mean, the preferred scenario is, of course, to go to 130, but we don't have the confirmation to me yet, because I'm using the logarithmic scale with the upper band with a triangle upper band that is around this level, so we don't have the confirmation yet that this move has started. But this impulse that is absolutely massive and very pure and respecting everything that we like to see in an impulse with high volume, high volatility, is showing us that this scenario is very close to happen. We're gonna have a look tomorrow, guys, together at what is happening on the option market, but it's very hot. The volatility got hit today. I'm gonna be personally buying calls very soon, probably on Friday and early next week if we're still in these levels. So I sum up the situation, guys. This is to me looking like a second wave pullback, even if the volatility is a little bit higher than what we expected. The volume is low, which is good. We broke out below 26, but like I said, high volatility period always give us some excesses, so maybe we're going to take it back tomorrow. Maybe not. If we keep dropping, it's totally fine. I'm going to buy more shares at 21. We are still in control. And we are still developing, I think, in this five waves move that can go, guys, to 130 and maybe even higher if the squeeze, the real squeeze happens. Now let's quickly go through GME price action. GME was stronger today. GME only moved down by 7%. So AMC 12s, GME 7. I told you in my video I did yesterday that those two were trading at fair levels, one compared to the other one, which means that right now AMC is trading at the discount, guys, all right? So GME at a premium of 5% or AMC at a discount of 5%, which means that if you don't know what to buy, it's better to go to AMC just looking at probabilities. And we can see that as well in the fact that GME is holding well above the 200-day moving average, whereas AMC has not taken it back yet. GME is also holding strong above the 160 level. Even it didn't even touch it today, whereas AMC has broken out below 26. Once again, this breakout can be taken back easily yesterday. So GME is holding strong, which is a very good sign, because we know that if GME moves to 250, AMC will be trading, guys, around 45. Okay, this is math, and this is what could happen. So seeing that GME is holding well is a very good sign for AMC, and is giving me more confidence in the scenario that I'm giving you guys. So the scenario on GME is exactly the same. We keep consolidating. So the 21 level of AMC is the 130 level of GME. So as long as GME is above 130, I'm bullish, and I think that we're looking great. Now the second wave pullback has lasted for now 2 days. We don't want to see this correction lasting for more than a week. It can then last a little bit longer, but then it would not look perfectly as it should. So that's it for me. I hope you guys enjoyed this video, and if you did, please don't forget to click on the sub, like and bell button so you're gonna be the first to know when I upload anything new. And stay close to shore. I'll see you guys.